I'm Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, January 24th, 2013. Hopes for a rally in the grain market ran into some opposition this week, ratcheting up tension and risk for farmers. Market analyst Paul Burgener joins me to discuss a nervous time for the trade. Lack of news may be partly responsible for the softness. Not only was it a short week due to the Martin Luther King Jr. Day holiday, but we're in what's typically a lull following the January USDA crop reports. The next big data dump from the government really doesn't come out until the end of March, when planting intentions and grain stocks are updated. Of course, it's the peak of the growing season in South America, and that's where the big news came from. Forecast for a shift to somewhat wetter conditions in southern Brazil and maybe Argentina turned the bean rally around. Technical selling also figured in. March futures failed to hold a move above its 200-day moving average, but was able to bounce off support at the old resistance line off summer and fall highs today and close very firm. USDA announced a big sale of 2013 crop soybeans, almost 23 million bushels, mostly to China. But there were a few signs of softness in the cash market where bases pulled back at the Gulf this week, suggesting maybe demand was slipping a little. There's a lot of talk in the trade about whether Brazil will be able to ship out its crop in a timely fashion, with ships already lining up at ports there, even though harvest was delayed by heavy rains in the north. Paul, should farmers be betting on weather or logistics as reasons to continue storing old crop soybeans?
Well, Bryce, I'm really hoping that we have most of those old crop beans moved. I know there's still a few out there and guys are still holding some, but those ones are a little bit tougher to look at. They've got a market that's going to bring a fairly large crop out of South America and could put some pressure to us. So holding on to those old crop beans, looking for that 15 or better price may not be a good thing to do at this point. I still think there's some bumps upward in the market, but maybe not quite what we were hoping for at earlier in the year.
Yeah, we've recommended being 78% or more sold, and I'd like to get that up a little higher if we could get up to 15, but at this point, as long as it's got a lot of sales on the books, not a whole lot of risk for old crop maybe, but new crop, another story. Going to have to wait and see what that crop insurance price is for February, and starting to get a little bit nervous about that. The corn market fared better than beans, holding last week's lows and reversing modestly higher on Thursday. Basis in the cash market remains very strong, but its trend depends on where the corn will wind up. Bids in the export pipeline softened noticeably as foreign customers look elsewhere for their feed. But other places, basis was mostly stronger. Bids in Omaha did soften on news that 2 ethanol plants in Nebraska were closing, but other plants were in the market as margins finally got back above water this week. Production of ethanol was up a little in the latest week and remains on track to meet USDA's forecast for the marketing year. Still, the big unknown right now is domestic feed demand, and news on that won't be known until the March 28th stocks report. Paul, should producers be expecting anything but choppy markets into February?
I think that's exactly what we're looking at is really choppy markets, kind of trading in a fairly narrow range on into February. It looks to me that there's still some cattle out there that need to come to feed, but the feedlots are not excited about bringing them in. We're not pulling them in real quickly, and what I'm starting to see now is some concern as to whether or not all of that demand for feed is really there. So choppy markets into February is as good a term as we can put on it right now.
Wheat prices appeared on the verge of a breakout higher last week, but those hopes evaporated this week. New crop futures failed in bids to move above their 200-day moving averages in Chicago and Kansas City, but the news wasn't all that bearish. Forecasts showed a better chance for moisture over the next 2 weeks, but most of the precipitation looks like it should miss the western plains. Key states will be reporting updated crop conditions for January over the next couple of weeks, and those shouldn't show a whole lot of improvement either. Demand for old crop hasn't been gangbusters, but it's doing somewhat better than the first half of the marketing year. Paul, there didn't seem to be much of a reason for the market softness this week. Am I missing something?
Well, I don't think you're missing anything. One of the things is that the weather forecasters have really been talking about, some additional moisture in the plains. Uh, if you're not really looking at that real close and thinking about it, what they're really talking about is less than a half inch. That's not going to help much. Even if we do get moisture in the plains, we're talking a limited amount. So I think the market softened on some news that maybe they took a little bit too much to heart on what really looks like a minimal amount of moisture coming to the plains at this point.
Well, thanks, Paul. I'm off to Brazil this weekend to look at conditions there firsthand, so look for my reports on farmfutures.com. Paul will be taking over the morning market review in the meantime. Thanks in advance, Paul. We'll be back with the news from South America in the first week of February on the next edition of The Buzz.